Bitcoin right now has broken below this sideways trending channel, but right now it's making these upside movements. Is it going to reject right here off this strong trend line that was support, potentially going to act as that support to resistance flip? Plus Ethereum looking even more bullish than Bitcoin. We basically had a 3-push wedge in this area. It made sense that we were going to have some downside movement, but we're basically in a form of a sideways trading range that's slightly tilted to the upside, and right now we've retested the bottom of this trading range, so expecting more bullish momentum from Ethereum. But is Bitcoin going to do the opposite? Make sure you stay tuned to watch the entire video, and if you haven't already, make sure to smash the like button, make sure to smash the subscribe button, and leave a comment if you've been enjoying these crypto videos. Let's smash through all these charts. We're not going to spend more than 30 seconds on one single time frame or one particular coin combined. So let's start off right now. Bitcoin on the weekly time frame, obviously overall still trending to the upside using the 20 EMA. We do have this value zone right in this area where we're coming through with the short and medium term. We basically nearly poked through it, but not quite yet. That's potentially where I'm expecting more upside momentum, even if we are going to have a bit of a downside push from the current price, even 5, maybe even 7%. Bitcoin on the daily time frame, as I spoke about in the beginning of this video, we have this sideways trading range. There was a lot of support all through this area. It's been broken through to the downside, potentially expecting this to act as a support to resistance flip, where we've had support in this area. It then flips to a resistance level and we have more downside momentum, and potentially that's what I'm looking at, because it also lines up nearly perfectly with the weekly chart to retest in this area, that 20 EMA. The only thing is, when we have this big bullish push to the upside and we get this sideways momentum, there's usually a high probability of continuation to the upside. So we need to really watch out and see what's happening. Ethereum daily chart looking a little bit more bullish. Obviously made this 3-push wedge, but we're basically in this parallel channel right through this area, slightly tilted to the upside. We have a little bit broken to the downside. So again, potentially, as these areas all through here were acting as support, potentially going to make this bit of a push, looking for that downside continuation since we've broken out of this channel. But right now we are seeing a bit of continuation to the upside. We were down at this 1830 level. Currently we're close to that 1880, 1885 level. Dogecoin making big pushes to the upside in these areas. Obviously we had that trend reversal. We were all through to the downside on the daily chart. We then moved sideways, basically not being able to get too high, not being able to get too low. And now, since we moved this sideways direction, we've actually reversed the trend, and now the trend is moving to this upside direction, looking to get any continuation in this value zone. I don't like to be buying high, even if the trend right here is saying let's get right in. I would prefer to be buying in a pullback in these areas. I'm just going to get so much higher risk to reward on my trades, because I'm going to have to, if my risk is down to here, or if I buy it up here, I'm still going to have to risk all the way down here. Whereas if I can get into this area, I only have to risk a very small amount, but same level, doesn't matter where I'd be buying, would be my stop. Litecoin, we do have the halving really coming up very, very soon. Basically next week it's going to be happening, and we've been talking about, we have that run up pre-halving, but we have a sell-off coming into the halving. So that's very, very common for Litecoin. If you go back every 4 years, or roughly 4 years, when their halving is, you need to look exactly when. We've gone through it in a previous video talking about how we have this push coming into the halving. Then once about a month before, we have that real sell-off down. We were at this 112 level. Now looking at roughly that $90 level all the way down, we had roughly 25% drop. So pretty massive, especially if you've got that larger portfolio. Ethereum Classic basically making a failure out of this level here, but it made a lot of sense. Although we did have this uptrend in the exponential moving average, you start to look at these bars through here and then this continuation to the downside. When you see this massive sell-off, that happened in one day, where we basically opened at this price, we pushed up 12%, and then we closed down 1.5%, close to 1%. So overall, basically a 20+% move up and down, including them both combined. So a massive day, and also showing a massive rejection. So this EMA support level definitely is valid, because you can see some people taking trades in this area and definitely getting some pushes up. So if you put your trade with the right risk to reward, you can see this was on the daily chart. Overall, a 9% push to the upside in that push, and if you had that rough 3% risk, you definitely would not have been hit. So looking at these trades, you needed to evaluate, was it worth it in this area? It probably was to make just a quick scalp on the trade, but you're not looking to then come back and retest these highs, because you've seen prices come into this area, and what's happened? We've had major rejection. So what happens when price comes in again? What do you expect? Do you expect it to just blast through that level and continue much higher? Or do you expect that since what's happened in the past, we've had rejection in this area, we've had rejection in this area, we've had rejection in this area, what do you think is going to happen in the future? And it's just a weight of probabilities. What do you think has a higher probability? In my personal opinion, it would make more sense to be selling in this area than it would to be buying and looking for more push to the downside. So overall, you just need to be weighing up the overall probabilities of every single trade. And more that you're trading, you actually create your own trading journal. And when you have your own trading journal, you're able to document every single trade you take. And then all of a sudden, say you have 3 or 4 different strategies. You like to trade triangles, you trade wedges, you trade the EMA strategy. Let's say you just trade those 3. And then what happens is, all of a sudden, every time you see those trades, you start taking them and you start filling up your trading journal. And when you fill up your trading journal, all of a sudden you've taken 50 trades after 2 or 3 months. You can go back and group all of your triangle trades, all of your wedge trades, all of your EMA trades, all into one, and put all the wins and the losses, and you can start to see after 20 or 30 trades doing just one particular strategy, what's my overall win rate? Is my overall win rate 60%? What's the win rate on my shorts? What's the win rate on my wins? So you can really deep dive into your own statistics, and all it does is actually increase your profits. You start to see that taking the EMA strategy but only to the long side is 3 times more profitable over 100 trades than it is taking it to the short side. Then all of a sudden, if you just cut the short sides out and you only take the long sides, you basically start to increase your profits, or you start to don't take those trades and put a little bit more actual capital into that particular strategy rather than this particular strategy, and you start to formulate a real proper trading strategy. You have something that can work with you in the greater long term. You're not just using this quick get rich quick scheme. You're actually really getting in long term and actually seeing what you can truly do in the market. And it's not just going to happen in 3 to 5 seconds. It is going to take at least a small amount of time for you to really grasp these skills. So even coming over here and looking at AVAX on the daily chart, we had a massive run to the downside all through this area here. You can see from this percentage, roughly 54, we can call it 55 because I didn't go all the way to the high, 55% move to the downside. And then look what's happened here. From this low all the way here, we had a push close to 60. We did get 60% to the upside from this particular zone. So you can see there began to come a lot of sell-offs, and you can see why. There's been support in this area. There's support all in this area. We start to push that through. We see price came into this area, start to have that rejection. It makes sense. It even makes sense because there are a lot of buyers in this area. A lot of people were buying. They held through this drop, and when price came back into their level, they got out of their trades. It makes so much sense when you actually understand what's happening in the market, and you can put 2 and 2 together and you have that full understanding. So make sure to check out the description and the pinned comment in this video, because I'm going to give you my trading masterclass for 50% off. Yes, I have 2 different courses. I have my previous course and I have my latest course. They are currently 50% off on Udemy right now. You can only use the link in my description or the pinned comment to get this 50% off deal. So make sure to check it out, as it's over 6 hours of pure trading content, and I teach everything that I know about my own trading strategy and even different trading strategies and tools that you can use and you can adapt to use in your own trading strategy. If you'd like to continue watching a YouTube video, click the one that's on your screen right now. Make sure to smash the like button and the subscribe button. I'll see you in the next video.